Hello, everyone, and thanks for joining us for this week's webinar on PPP Round 2, how the $900 billion COVID relief bill affects small businesses. Really big news. Not only is there going to be relief for many small businesses, we're going to talk about who qualifies and what that all means, but some really long-awaited relief as it relates to what many saw as maybe some deficiencies or at least some surprises back in the original round of PPP. And I'm really lucky today. I got a great guest. Neil Seiden is joining us today. So Neil is the principal of a company, Asset Enhancement Solutions. It's a financial advisory firm that provides both investment banking and consulting services to companies that are considering transactions like selling a company, acquiring a company, or raising capital. In Asset Enhancement Solutions, AES, they specialize in arranging debt and equity financing for companies that have challenges. So like unfavorable challenges such as operational, legal, tax, financial, or liquidity issues, or positive challenges like opportunities for growth, acquisitions, long-term success, etc. AES has arranged over $500 million in financing for mid-market size companies, public companies, and small businesses. It really, I'd say, probably in most all industries. Neil and AES currently serve as an agent for various lenders that make PPP loans, and this is where Neil comes in for this his expertise today. They've been involved with over 800 PPP loans, totaling more than 100 million to businesses and nonprofits in over 30 states. Neil has been interviewed by ABC, Eyewitness News, Newsday, News 12 Long Island Business News. Truly a recognized expert. I don't know anybody probably who knows more on the topic of PPP loans. Neil is periodically quoted in the New York Times, Newsday, Long Island Business News, and a frequent panelist on symposiums on financing, and he's the past president of the Long Island chapter of Turnaround Management Association, past president of Long Island chapter, the Institute of Management Accountants, and currently on the board of directors of the Mid-Market Alliance of Long Island. So, Neil, welcome.
Thank you, Mike. Appreciate it. Glad to be here for you.
Yeah, you know what? There's so much to these PPP loans. I think is, you were diving in, Sure was diving in, small business owners were diving in early days. What seems simple on the surface, the devil is always in the details, right? In the rules of how these things are applied, differences between SBA rules and how banks may apply and interpret those rules and what their individual requirements are going to be. So coming to this conversation with the experience of more than 800 deals across 30 states, I couldn't ask for a better partner, so thank you. So here's what I want to do, everyone, today. We put together what we think are probably the high probability questions that everyone has. So on surface, some of these things might be a little obvious, but again, the devil is always in the details. So I wanted Neil to kind of help shed some light. The reality is we're waiting on guidance from the SBA, just like the banks are waiting on guidance from the SBA. But I think we're going to talk frequently about the things that we know, but also the things that we don't know. And when I say we, I think no one knows. At the end of the day, the banks can't do a darn thing until the SBA actually gives them much more specific guidance on how to interpret some of these rules. So with that, let's try to demystify and unpack this most recent round of COVID relief in this round of PPP, so that as entrepreneurs, business owners, the executives of mid-sized companies, you guys are all as informed as possible that you can take advantage of some of this relief. So maybe a step backwards, Neil. Because I think it impacts, how Congress looked at this deal, the efficacy of the first round of PPP. How do you see the success or not success of round one in how that's impacted this most recent round?
So I agree with you, Mike, that certain changes are being made in the second round to accommodate some of the flaws in the first round. But I would say overall, the first round was a huge success. It started out with chaos. Everybody was clamoring for the free money all at once. The large banks weren't prepared for it, just as Congress was not prepared for the excitement that happened yesterday. The big banks were really not prepared for the chaos of millions of people flocking to them all at once, but it finally got under control. $525 billion of PPP money was given to about 5 million businesses and nonprofits between April and August 8th of 2020. So it was a huge success. I mean, it was a great way to deploy money quickly. Some of the things that we found were people that, for example, people that are listening to this podcast are educated people. They have an interest in learning, and they're connected, and they're well networked. So what we saw was that people that had good contacts, whether it's their HR and payroll processing company, attorneys, accountants, or they had relationships with bankers, got taken care of, whether it was quickly in the beginning or eventually. They eventually knew where to go. However, people that were not connected, a lot of minority business owners, as well as folks that don't really listen to the news or read the newspapers and stay up on business and current events, were not informed. A lot of people we found did not even know about the PPP program. You wouldn't believe, I even was invited to attend a, what would you call it? It was almost like a cheering section with government officials here on Long Island to try to not get out the vote, but get people to apply for PPP. So I think that one of the big flaws was that the government did not publicize it enough, did not promote it enough, whether it's in the minority communities, small businesses. You wouldn't believe, Mike, we even found well-educated financial consultants didn't even know that they actually qualified for the loan. So I think a lot of what's happened now in the second round is to alleviate and rectify some of the problems that existed in the first round.
Yeah, you know what? I feel like round one, everyone's drinking from the fire hose. I think there was so much uncertainty around everything, right? Is this shutdown going to be for 2 weeks, which was kind of a lot of the original talk, right? And obviously the government erred on the side of huge infusion of cash as fast as possible, without a whole lot of rules in place to even do so. But I think people were still figuring out, oh my God, how do I even work from home? What do I do with my employees? We're not really set up to do virtual. I mean, they're thinking about surviving, and am I going to get sick? And am I going to make it? Not just how do I apply for a PPP, or what's the difference between a PPP and an idle loan and all this kind of stuff. And I think a real travesty is so many banks simply, especially really conservative banks, they just didn't participate, whether it was a big bank and weren't set up to do it, or small banks too conservative and afraid of it. There's a whole lot of people that were just really underserved for a long time. So hopefully I feel like as a world now, we kind of know what we know and what we don't know at this point, and it's still scary times. It's perhaps going to get worse before it gets better, but I think everybody's kind of braced for it and knows what to happen here. So hopefully conversations just like this one today are gonna help bring everyone up to speed. And one of the topics I want to spend some time on here, Neil, is you might shop many banks, and that's kind of where you come in, and your expertise is developed. If you sat waiting for your bank to tell you about the PPP and they didn't participate, you were left on the sidelines. Anything you want to comment before we move on to the next topic?
Yeah, I just want to throw out an analogy. the way, you talked about the banks, not knowing what to do and it went slow, you could kind of compare that to, the vaccinations now, you know. It's the same kind of learning curve, and it had to be done quickly. The banks had the SBA used the banks to distribute the money. That was the quickest way to get money, because there's so many banks and lenders throughout the country. And with the vaccinations, right, they went to the states, and now the states are having, we're kind of who are like the banks, trying to get people injected with those vaccinations. So it's a very similar, very similar thing. It's not going very well, the vaccinations. So hopefully, more importantly, that'll turn around and everybody will get vaccinated very quickly now.
Well, and I think it just contributed to the confusion, right? I mean, I just know, just personal friends, small business owners locally here that I talked to about all this. And there were small banks that were not participating. There were banks that said they were participating, but also clearly didn't know what the heck they were doing in fumbling their way through it. There was other banks that participated, but maybe put loan caps that were not part of the legislation. Certainly those caps didn't come from SBA, but just kind of tied back to their risk profile. Some banks asked for all kinds of documentation that was not required. So as people talk to each other, it was just more confusing, right? So hopefully, I think we're going to have more clarity this time around. But I think something everybody needs to realize is, so Congress passes the law, SBA sets the rules, it's still going to be up to the banks for what they require from you as a small business owner. Can you comment on that?
Yes, everything you said was correct. What our experience was that each bank looked at it differently. Some banks beat it to death and looked at it like they were underwriting a regular loan, when all the literature stated that the lenders had no liability. They were to rely on the certification of the applicant that was signing off on it as to the viability and accuracy of the numbers. But they required a lot of documentation, so that took a lot of time, where other banks would just put it right through, and they relied on the borrower's certification. So everybody handled it a little differently. And not only with the paperwork, but also those that they deemed to be eligible or not eligible. And I have some interesting stories to share, later on during our discussion regarding that.
Well, you know what? Let's stop rehashing the old. I think it was an important backdrop, but I think the most important next question for everybody is really who's going to be eligible for the second round here. Can you break that down for us? I know there's some high level criteria that pretty much probably everyone in this call has already read, but let's put some color around that.
Okay, so in terms of who's eligible for a second round, folks that are eligible are twofold. One is people who did not apply during the first round. They were either they didn't know about it, they decided not to apply, but they are eligible for the first round. Also, there were certain business types that were ineligible the first round. They are now eligible and they could apply. But in the second round, those that received a loan during the first round are now being given the opportunity to get a second PPP loan. So what they did, so a lot of the discussion in the first round was, if everybody remembers, some of the very large companies took the loans. Some of them gave them back, but some of them did accept them. So to kind of correct that and try to keep the money to the smaller companies, on the second round, they're limiting it to companies with 300 employees or less. They also, in terms of, also during the first round, companies that were, certain companies, maybe food or delivery companies, actually did very well during the pandemic. So in order not to give these successful companies additional money, what they're doing this time on the second round for people getting a second loan is they only are eligible if they had a decline in revenue of 25% in any quarter in 2020 versus the similar quarter in 2019. So they want that, they want to focus on people that had a decline in revenue. They also want to make, they also said that people will only qualify for a second draw or PPP loan is if they've either used the initial PPP loan or will use the first amount of the first draw. And that's really going to be everybody, and I can't see anybody not really checking that box off. The other thing that's required is that the business was operational before February 15th, for a second loan, was operational before February 15th, 2020, which was the original requirement. What they also have done is it's almost a $300 billion figure that's available on the PPP loan, but they've set aside various pools of money so that small businesses will focus on small businesses. For example, they set $40 billion aside in this round for small businesses with less than 10 employees, or people seeking less than $250,000. And they also set aside certain, chunks of money, billions of dollars, to be given out by lenders in certain low-income communities, so that small businesses in those communities will get that money. So they're trying to rectify, those things. So that's pretty much it with respect to this.
That is one of the exciting things about this round, right? Is that the first round, it was we don't know, err on the side of stimulate the economy, and there's plenty of companies that didn't need the money that got the money. Good on them, I guess. It certainly helped, and presumably got had a stimulative effect in the economy because that money gets reinvested. But clearly, this is a much more targeted approach, right? To those companies first, at least financially impacted, that you had to have revenues in decline, and then also underserved communities and industries. Can you speak to the industries, entertainment venue types, restaurants that are more impacted, and how this is a little bit different for them this time around?
Sure. First, folks, the businesses that were venues, concert halls, auditoriums, maybe stadiums, they are now eligible for certain venue grants that I believe where they could receive a grant up to $10 million based upon a certain decline in revenue. So I believe their grants, I'm not that familiar with it, but the grants will be based not on a function of payroll, but more so on revenue. And those folks that will be receiving the grant money, the venue grant money, will not be able to get a PPP loan in addition to that. So that's one. The second is because the restaurants have been so hard hit, the loan amounts being offered to restaurants will, dollar for dollar, they will receive more money than a regular business. So the formula for calculating the PPP loan, you take the average monthly payroll, you multiply it by 2.5. This round for restaurants, hotels, food establishments that have a NAICS code, NAICS code that start with a 72, get to multiply the average payroll not by 2.5 but by 3.5. And what that does, that gives them an additional about 4 weeks of payroll reimbursement to so they will get more money than a company with payroll, similar amount of payroll. And I just want to go through that list of eligible companies for that. So it's hotels, casino hotels, bed and breakfasts, recreational and vacation camps, rooming and boarding houses, food service contractors, caterers. Caterers were decimated. So whether it's a wedding caterer or a Sweet 16 caterer, those drinking places, restaurants, cafeterias, grill buffets, snack bars, they all will get 3.5 times the average payroll instead of the 2.5 that everybody else is going to be getting.
Hey, Neil, do you know if their payback period will also be the same? So they're going to get more money. That's good news. But do they have to burn that spend on eligible expenses, aka payroll, rent, PPE, et cetera? We'll get into that maybe in a bit. But they're getting more money. Do they have to spend it faster than everybody else, or are they also going to have a longer compare time to spend that money?
That's a great question, and I don't think that, from what I have seen, that they actually are adjusting for that in the second round. You may recall that initially, in the first round, you had 8 weeks to use the money. Why was it 8 weeks? Because we all thought that initially everybody thought the pandemic wasn't going to last that long. Once it lasted, it was continuing. They extended the usage of the funds to be fully forgivable from 8 weeks to 24 weeks. Now, in the second round, they're saying that people have the option of choosing any time period to use the money between 8 to 24 weeks, but they have not made an exception to give the hospitality industry additional weeks. So, that's a very good point, and perhaps, there may be an amendment to that in the next few weeks to accommodate those restaurants, because now in the winter, many people are going in, and they may need more time to use that money.
Yeah, it'll be interesting to see how that plays out, right? If you think about 2.5 months of payroll for your loan in round one, when 8 weeks was pretty darned aggressive to be able to burn that, right? If you had to operate in, say, a reduced capacity, like you didn't have dine-in, so you only had carry out and kitchen staff, or you're a salon and you could only operate 20% capacity or something like that. But when they stretch it to the 24 weeks, it's almost a half a year. So that was actually pretty easy. So it'll be interesting to see how the SBA responds. Take a second here, Neil. Just talk about what the SBA's role is here, because I know you and I were chatting this morning before this meeting. But we were expecting a bunch of guidance from the SBA yesterday. Now, maybe it's because of all the craziness that happened on Capitol Hill that it delayed things, but there's a whole lot we don't know yet, right?
I think there's more that we don't know than what we know, really. And it could be that they're taking more time this time around because they realized that it came out so quickly the last time. I think between the timing of the the CARES Act was the 27th, and the money was available maybe the 4th. So I think it was maybe within from Friday it passed, and then the money started to be dished out the following Friday.
Yeah.
This time it's taking longer because hopefully they learn from their mistakes, and it's better to prepare, have all the rules down pat versus letting it go out, without really thinking about it. So
yeah, and if I could digress just for the audience, so I am not giving you legal advice. I'm not qualified to do so. I'm not a lawyer. Neil's not a lawyer. You need to seek your own counsel, make your own decisions. But I think Assure's guidance to help small businesses would be just lesson learned from last time. They can as people were afraid funds were going to run out. They rushed into deals perhaps that weren't as good as they could have gotten, and they got funded perhaps too early when the shutdown still happened, and they couldn't even spend the money. And I personally know people who were paying their employees with PPP funds instead of putting them on unemployment during a period that they also didn't generate any revenue. And so when it came time to open the doors back up, their PPP money was already gone. So our guidance would just be exercise caution, always conserve cash to the very best of your abilities. And I think we can safely guess that the cavalry's coming. If this tranche of funds runs out, they're going to continue to fund this. It's hard to imagine that they're not. And just based on how many dollars are in this round compared to the last time, I just wouldn't rush into any decisions in a sense of panic. How do you feel about that? Do you agree with that, Neil?
I do. Let me just retract. You talked about the SBA's role. The SBA typically, SBA is really not a lender. Typically, the SBA's role in pre-COVID is to guarantee loans for banks that make the loans, and that allows the banks to be more aggressive. The SBA, though, the EIDL loan, the Economic Injury Disaster Loan, which they made available for COVID-19, also for Hurricane Sandy that we had here in the Northeast, as well as 9/11. The SBA had the EIDL loans, so that's where the SBA comes in. They'll lend money in the EIDL loans. With respect to the continuing of the funding, I agree 100% with you, Mike. We saw last time the money, the 329. There was the first round, 350 billion was dispersed in the first 2 weeks last time around, and then they extended. Then they put in several billion, hundreds of billions in a second tranche. All that money ended up not being used, but they also, the initial program was supposed to stop June 30th, but they extended it to August 8th. So yeah, we believe that if the money runs out this time, they will definitely increase it. And if people are still requesting the money, that they will probably extend it beyond March 31st as well, so that everybody has time to get the money. And I agree with you. People should not panic. I'm afraid. We're already seeing it. We're getting dozens and dozens of emails from clients, and we've actually pre-registered with some of our lenders, hundreds of people. People are starting to panic, and there's going to be a run on for the money, I think, within the next week. But people should know that, President Biden is going to make sure everybody gets their due share of PPP money. And that's why in this second round, they are allowed, even though they have capped second timers at 2 million, they're giving people that didn't get the money the first time the ability to get the same 10 million that those people got in the first round that were eligible. So they want to make it fair for everybody.
Yeah. All right. Let's move on to question number 3. I think this is important, and I want to talk, Neil, about what we do know and what we don't know. So, how is the 25% reduction in revenues going to be calculated? I'll just kind of put the follow up in there. How the heck are they going to prove it? How is it simply going to be checking a box of an attestation where you certify that it's true? I'm really curious to see what SBA is going to guide the banks for how to validate this reduction.
Well, right now we're not 100% sure. And one thing you said in the opening, I want to go back to that I wrote down, and it's more true about this PPP program than anything else I've seen in my career, is that the devil is in the details. And you used that word, but in all the talks that I've had, I always use that expression, and not more and more so here. So one school of thought is that for loans that will be up to $150,000, these PPP loans, that they will only ask you to click on a box to state that you're certifying that you had a reduction of 25% of revenue quarter over quarter from the prior year. Those that, I think people with loans higher than 150 may actually have to enter into their application what the revenue was for each quarter of 20 versus 19. We're not 100% sure. It could be that those that are certifying with the smaller loans, when they actually ask forgiveness, they may have to provide that documentation later on. But we have no idea, and that's what we're all waiting to see. And I believe a lot of lenders, once the rules come out, they have to adjust their applications to reflect what the SBA is saying, and that's what everybody's really waiting for now until they're able to open up their application portals. But what's interesting here, it's a little tricky with respect to the 25% revenue deduction. If you were in business a full year of 2019, it's easy to compare quarter versus quarter. And the 25% revenue reduction is really, as long as you had a reduction in any quarter versus the prior year, you'll be eligible. However, if you were not in business for the full year, it gets a little tricky. And I had to write this down because it's a little tricky. So if you were not in business in the first quarter of 19 or the second quarter of 19, but you were in business for the third and fourth quarters of 19, so the comparison is any quarter in 2020 versus the third and fourth quarter of 19. So you compare any quarter in 20 versus the third or fourth. If there's a 25% reduction in revenue, you're eligible. If you weren't in business for the first, second, or third quarter of 19, but you were in business for the fourth quarter, you're going to compare any quarter in 20 versus the fourth quarter of 19. If you were not in business in 19 at all, but you were in business before February 15th, 2020, which again, that February 15th date, okay, so this is for a business that opened in January or early February of 20, what you do is you compare the second, so you compare any quarter in 2020, the second, the third, or fourth quarter revenue to the first quarter revenue in 20, and if there's a reduction in the revenue from the first quarter to the second, third, or fourth of more than 25%, you're eligible. So it's a little confusing, but there is guidance as to how you calculate the quarters if you weren't in business the full year. So I hope that helps.
Yeah, and I think I would just kind of guide people, you know, I'm just going to assume that different banks are going to handle this differently. So the SBA is going to publish rules and guidelines that require how the banks attest and certify this reduction. But I think it's perfectly reasonable to think, you know, I think there's like something like 4,500 participating lenders in round one. Of the 4,500, there's going to be lots of different approaches for what documentation they require of you, right? Whether it's just a simple printout of a P&L report from your QuickBooks, or you know, you're going to have to actually provide receipts and register, cash register comparisons. I'm assuming it's going to be all over the board. So I would encourage people not to freak out too much about this. Say, hey, my bank's asking me this. That's not what I read online. That's not what you said in the webinar. Sure. Neil, you think I'm off base saying this? That I think, because like round one, it was based on payroll, right? So it was easy. You just show your quarterly tax return, your employer tax returns, your 941s, and the math is the math. But here, in you know, because you got taxation issues, you got quarterly filings to basically prove how much you're paying in payroll. It can be a heck of a lot harder thinking about all the ways people collect revenue, whether it's going to be cash accounting versus accrual accounting, cash register receipts versus invoices sent versus invoices paid. How would you guide people to think about this until we get some more clarification from SBA?
I think you're exactly right. It's going to be, I think a lot of people, unfortunately, don't prepare monthly financial statements and may not have that information readily available. And then they talk about, they use the word receipts, and in terms of the reduction in revenue, and receipts is a terminology used in on the tax returns. Some people prepare their tax returns on the accrual basis, as you mentioned, some on the cash basis. Some industries have some esoteric accounting, like construction. They use percentage of a completion accounting. So what we've been advising people now for weeks and weeks is to start summarizing their revenue, monthly revenue for 2000 by month, as well as for 2019 by month. And then the devil will be in the details as to some of the definitions that we're all looking for as in guidance. But the reduction in revenue this time is really you have to get through the door to be eligible for the second draw. You have to show that 25% decline in revenue. Then after you get through the door and they were eligible, then at the same 940s and the 941 payrolls, that information will then be used to calculate, in addition to other expenses, the actual loan amounts. So adding the rule on payroll and on revenue reduction, it creates more paperwork and a little more confusion on the applicant side, but it is really almost like the price of admission for the second round.
Yeah, I guess, yeah, so again, this isn't legal advice, but I think we can just kind of look to how the last round played out. When you think about like the forgiveness applications, they continue to get simpler and simpler. And what started out as one forgiveness application, it was one size fits all, regardless of the size of the company and size of the loan. As seems reasonable to me, it remained pretty damn complex for big companies that had big resources, but also borrowed a ton of money to prove that they spent it in the right way. But the small loans, small business owners, the SBA really lifted the burden on proving it. Where, and Neil, I don't remember the dollar amount, I'm sure you do. Where at the end, to get forgiven, it was simply, you didn't even have to provide documentation. You just had to check a box and sign in the dotted line. Basically said, I promise, I'm attesting that I spent this money in the right way. And if you did that, you got forgiveness. Well, do you remember the dollar, the thresholds?
Yes, so it came out a few months ago. Anybody that 50,000 or less, they had a very simple form. And now with the enactment of this new law that was signed recently that's coming out, they've upped that 50 to 150,000. So they will be coming out with a short form, a one-page document that should be very easy to complete. It's not going to, I don't believe it's going to require, it's going to ask you questions and where you would check off yes or no versus you having to maybe fill in the dollar amounts of the different expenditures you incurred. So it will be a lot easier for people. People will be able to do it, I believe, on their own versus having to perhaps retain somebody to assist in something that might be complicated. So it shouldn't be complicated anymore. Hopefully.
Yeah.
Again,
so yeah.
Wait and see.
Yeah, right. So to be clear, this is Neil and Mike speculating what we think is going to happen. I think history is probably a pretty good tell for how this will unfold. But until we have clear guidance from SBA, I suspect there's no money's going to start to move. So, all right, let's move on to our next topic, Neil.
Well, Mike, one important thing is that people that received the PPP, the first round, that are eligible on the second round, you do not have to have received forgiveness to get the second loan. Okay, so you can get the second loan without having gone through the forgiveness process. That's important for people.
That's really important especially for some people who sit in that camp, and it's also a perfect segue to our next question. So Neil, what about the people who never received a PPP loan in the first place? And I think you got a couple camps here, right? You got people who applied and got denied, many of which for not good reasons, that had they shopped around probably could have got something. But there's also another big group that just simply didn't apply.
That's true. So if you didn't get if you didn't get a loan the first round, you will be eligible to get 2.5 times your average monthly payroll and all the healthcare costs and retirement and everything else that goes into the calculation. It's not just the compensation aspect of employee costs. There's other costs that go into that calculation. Unlike the people who only get $2 million on a second draw, first timers will be able to get up to 10 million. Okay. Now there's certain exceptions where you can get even additional money, and that relates to people in the hospitality, restaurant business with multiple locations, where their industry code starts with the 772. So also the first timers are able to have up to 500 employees, whereas the second timers are limited to 300 employees. So the bigger companies that didn't receive the money the first time will be able to get more money, and they could be bigger companies with more people than those getting the second round. Okay, so I hope that helps. And
yeah, it does. And so I got a follow-up question, because I think it really it flows into our next question for people who are turned down. So I've talked to people, Neil, small business owners. A couple of scenarios come to mind. Number one, hey, I didn't apply because we don't have good credit. So I want you to let's tackle that one. Can you speak to credit worthiness as a requirement for PPP loans?
It doesn't matter. Credit worthiness is not a consideration in determining if somebody can get a PPP loan. You could have bad credit and get a PPP loan. Just to understand PPP, there's no personal guarantee. There is no credit check, so they're not checking your credit, and you do not need collateral. All those three things. So really, you could be the, they rather give the people with the bad credit the PPP loan than the people who are doing really well and really don't need the money. So,
that's such an interesting way to say it. I couldn't agree more. And my heart breaks for I talked to someone literally a week ago. Oh no, we didn't apply for it because we don't have good credit. And I'm like, oh no, you're exactly the kind of person that this is meant to help, right? So give your pitch to anybody in that camp how they should be proceeding this time around.
Exactly. So you don't have to worry about your credit. What they don't want to give the money to is certain felons. And during the first round, when they saw there was a lot of money left in July and end of July, they kept on loosening the rules. They came out with different announcements so that certain felons, based upon the crime you committed, were eligible. And although there was one felony, it was certain felony that they didn't loosen up, that I'm trying to think of what it was. It related to not bank fraud, but of bribery, I believe. Yeah, bribery. They didn't allow felons that committed bribery to be eligible, but they loosened it up. So they kept on trying to get more and more businesses to be eligible. This time around, we believe there is going to be a question to try to deter healthy companies from getting the money, in that they're going to ask people to certify that without the PPP loan, their business may be in jeopardy. So again, they want to deter healthy companies from getting the money so that there's more money available for those that really need it. So
Yep. Very good. Hey, and then you have a unique story here, and I'm not looking to make a sales pitch for your firm. I think that speaks for itself. But you dealt with a lot of customers that were turned down for loans. You know, it wasn't a creditworthiness situation, but they were turned down for any number of reasons that you just helped them get loans from other banks that they didn't realize that was even a possibility. Can you speak to somewhat maybe the top 2 or 3 reasons why people may have gotten declined that turns out weren't even valid?
Sure. We found, and it was interesting, certain lenders were not, didn't really, the devil's in the details. They didn't look at the details. So they turned down people. And I'll give you a few examples where we assisted dozens of companies that were turned down once or twice, and we figured out, how to get them eligible or why they were turned down incorrectly. We'll give you a few examples here. One, we had a pretty large retailer out of the Midwest that owned a very large company, and they were getting decimated. I think they owned 25 retail stores. They went to their bank was a big bank, and their bank told them, well, you're a retailer, you're not eligible. So they didn't seek to apply. Luckily, they saw an email that we had put out educating people about the PPP program. They called us and they told us what their bank told them. They said, of course you're eligible. We got them close to $6 million in PPP money, Mike. So again, that was the fault of the lender. We had another example of a small business that got turned down once. They got turned down twice. They came to us, and they were a company that helped businesses get financing. They did leasing of equipment. They provided a service of getting more so healthcare companies financing equipment, medical equipment. And when on the application, it asked for the NAICS code, NAICS code. Again, the hospitalities, they start with a 72. Well, everybody in the application, you have to select a code that describes the nature of your business. And this gentleman selected a code of a description that said he was a lender. According to the regulations, lenders, factors, and banks are ineligible for a PPP loan. I got on the phone with him and I said, are you a direct lender? Are you lending your money? He said, no, I'm more of a broker. I broker the deals. I don't use my money. I connect my client with a lender. And I said, well, you got turned down because you used the wrong code. I said, let's reapply with us, use this code instead of the code you used, and we got them approved. So again, I hate to say it, the devil is in the details, and people need to know what they're doing when they apply, because one little false move like that could disqualify somebody from getting, hundreds of thousands or millions of dollars.
Yeah. So I guess let me put a cap on this one. So I'm gonna share Neil's contact information at the end of this. Again, this is not intended to be a sales pitch for Neil. He does a great job. If you want to use him, you can. To me, the lesson here is relationships matter in banking for small business owners, for sure, right? But Well, it seems reasonable to me that you're going to give your current bank, your current lender, first shot. If you get turned down, there's a gigantic market. There's 4,500, more than 4,500 participating lenders that worked in the first round of PPP. Not uncommon to get turned down in one place and be told yes by another place. So if you believe you're in the right, devil's in the details, deals right. Don't give up and don't take no for an answer if you think you're in the right and this money can help your business. All right, let's move on. So I think another round of PPP obviously can have a huge impact for some businesses. But there's some really important changes that happened retroactively to round one, and there's a handful of them we need to unpack here, Neil. The first one that I think was a real sleeper, caught people off guard, is this whole tax deductibility of qualifying expenses. Can you kind of give everybody the before after from this latest the latest legislation?
Sure. So now since April, the guidance has been and is that everybody thought, basically was that the expenses that were used to calculate the PPP loan amounts, the salaries and the benefits, etc., would not be tax deductible. And what that would have done would have created a tax liability for millions of companies and businesses that had really losses, but all of a sudden they couldn't deduct these expenses. They would have a tax liability. And so there was a lot of big outcry, a lot of lobbying by, you name it, many dozens of different types of lobbyists, and they changed it so that you can deduct those expenses, and you do not have to recognize income and pay a tax on the forgiveness of the loan amount as well. So I know that accountants and tax preparers were advising clients to delay the filing of their 2020 taxes until this got all sorted out. Luckily, it was sorted out. Unfortunately, it was kind of late in the game because accountants who typically help their clients with tax planning, there was a delay. They kind of were delayed until really the end of December, the 28th, until they had an opportunity to do that. So that's one of the retroactive changes.
This, to me, just I talk to people all the time. This was a huge one, right? Because you hate to sound greedy on these things, because it was free money, right? And it was free money at a time when that it helped keep the doors open, help them survive. But if they couldn't deduct all that payroll and rent and interest expense as an expense in the P&L, and all of a sudden, therefore, we're going to pay income tax on what is otherwise a cash flow break-even business. I mean, the tax bill could have put them out of business at the end of the day. So really, really, really good news for small business owners on this one. The next one, talk about the EIDL loans.
Sure.
The EIDL loan offset to the loan forgiveness.
So initially, people that went through the forgiveness process, initially, if people received an EIDL grant, those were given from anywhere from $1,000 up to $10,000. Those were being deducted from the forgiveness calculation, so that you had to pay that balance off, and it wasn't. You had to pay that balance off. So people that got money were left with having to pay maybe $10,000 in the future. That's changed, so it's no longer an offset of the money that was received. So that's helped a lot of borrowers as well as a lot of lenders that now don't have to keep track of these small little balances that remained as well. The other thing that, in terms of being retroactive, is they're allowing for people that have not applied for forgiveness yet, is there are now additional eligible or covered expenses that people can use for their forgiveness calculation. And that will apply not only to the second PPP draw of the loan, but also the first.
Can you just hit a couple of those? I mean, I know like
Sure.
the person protective equipment.
Initially it was salaries, rent, mortgage interest, utilities. Now the covered expenses include, let's see, materials and people that we use for social distancing and worker and customer safety, the partitions and barriers, PPP, expansion of indoor space or outdoor space, ventilation or filtration systems, people that put up, and the cost of drive-through windows. Also, what's covered is if a company incurred through a contract an expenditure that they were unable to get out of, and it was a detriment to their business, the cost of that contract is also considered a forgivable expense. Property damage that was incurred in some of the certain cities where there was vandalism and looting due to public disturbances is also part of that of the forgiveness expense now, as well as because people are now working remote and have had to incur additional expenses for business software or delivery, tracking payroll and inventory and HR and payroll processing, things that maybe they didn't incur initially, but now they're incurring. Those also are on the covered expense list going towards forgiveness. So what the government is doing, between allowing more expenses to be forgiven as well as extending the time to 24 weeks, it almost makes it the likelihood of being forgiven 100%, which means it's called a PPP loan, but use the money used correctly, where you could document it or attest, you will not have to pay it back if you use the money to incur all the costs that I just discussed.
Neil, you're good at giving yourself segues. I don't know if that was intentional or not. So talk about this. So I think everybody understands. It starts out as a loan. You got to spend the money on qualifying expenses that you just kind of highlighted some of the changes. What other color commentary you might add here about how this thing becomes a grant?
So what's interesting is, we did a lot of presentations and webinars explaining to people the likelihood that it's going to be a grant and not a loan. So if we look at the calculation of the PPP loan, you take the average payroll times 2.5. Okay, so you multiply, if you take 2.5 times the number of weeks in a month, which is, let's say, 4.3 weeks in a month, it comes out to 10.8 weeks. So 2.5 times, so that's really monthly payroll times so it's 2.5 months of payroll, which comes out to almost 11 weeks of payroll, right? So you basically are getting a loan, which could be a grant, for 11 weeks of payroll, and you have 24 weeks to use that money and pay those people. So you're really given a lot of time. So you get the money, you're given a lot of time to use the money for forgiveness for payroll and all those other expenses that I mentioned, which is the protection expenditures, the supplier cost, the property damage, the operational expenditures. However, you need to use at least 60% of that money on payroll. Again, it's the Paycheck Protection Program, and the whole concept of this program is for nonprofits and businesses to retain employees. So everything is geared towards incentivizing the management of a nonprofit or a business to keep paying its people.
Yeah, so the spirit of this thing from day one, right, is exactly that. So rather than the government just doling out, huge unemployment insurance reimbursements in skipping over the business owner and then leaving the business owners hanging in the lurch. This was meant to kind of two birds with one stone. How do we keep businesses open, the people who create the jobs, but at the end of the day, this can't be used for personal enrichment of entrepreneurs. This has to, the lion's share of the money has to go to people's paychecks, right?
Exactly. So you have the unemployment for the people that are unemployed. The government was giving stimulus money, whether it's $600 per family, $1,200 or $2,000. That takes care of people. But the PPP was taking care of salaried W-2 workers at organizations. So that's the spirit. But by giving 3.5 months to restaurants and hospitality is basically the equivalent to 15 weeks. And between all the expenditures that they had to incur, it allows them to pay their employees, so they don't have to work, but they want, the government wants the restaurants and hospitality industry to pay people, that 15 weeks of salary so that they could survive and until they're able to go back to work. So,
so different topic here, and I'll look at a couple questions left for you, Neil, and we'll wrap. I think there's a lot of confusion in the first round about who's eligible. When I think about the buckets of people who didn't apply, a common theme that I heard, and I just know in my personal life, some pretty smart entrepreneurs, solopreneurs, if you will, right? No employees, run their own business. They didn't apply because they had no idea they were not eligible. And these are smart executive type people, but they never even researched it because they just assumed it didn't count for them. What's your message to these solopreneurs who run legit real businesses but don't have employees?
Well, my message is more to the government and the SBA, in that because so many people, as you described, that and that I know in a similar fashion, did not apply, is really miscommunication by maybe it's the media or those that were getting the word out, that they somehow didn't get across to people that who are independent contractors, sole proprietors, single member LLCs, or anybody in the gig economy where they receive 1099s and they file a Schedule C on their personal 1040 tax returns. These are people generally that don't have employees, that have their own businesses or just doing consulting. They are all eligible for a PPP loan, as long as long as they file a Schedule C. There's a cap on it, just the way there's a cap on people that have salaries. They may not. There's a cap where you can't include any salary into the calculation above 100,000. Similarly, there's a cap on the Schedule C income of 100,000, but that maximum up 100,000 will get somebody a PPP loan of $20,833 as a maximum. So anybody that, again, that's a independent contractor, or anybody that files a Schedule C is eligible. And I met a lot of people, well-educated professional people that were real estate brokers, interior decorators, financial consultants, that didn't realize they were qualified. So,
hey, Neil, there's also some provisions here. We talked about it, but in a different context. What about these people's ability to go back to PPP round one? So let's say you're an employer. So you maybe you just took a draw, right, out of the business. You weren't a W-2 employee of your own company. You've got, say a dozen employees. You applied for PPP. You took your 2.5 times monthly payroll for that dozen employees. but you never included yourself in your just draw income that you would take as part of the mix, and you end up retroactively looking at this, you left money on the table. What recourse do you have?
Well, that's a tricky question, because if you were a C Corp or an S Corp and you paid, you had employees that got a W-2, but you never paid yourself a salary, you cannot get a loan, an additional loan based upon your salary, you know, on what your distribution was.
Yeah.
On a C Corp or an S Corp. We were introduced to a lot of folks that were turned down by various lenders, and these people were, it could have been that maybe they didn't have employees. So let's say if you're a C Corp and S Corp, you have employees, they're covered, you can get a loan related to their costs. But if you're a C Corp or S Corp, you didn't take a salary and give yourself a W-2, and you only took a distribution, you cannot get a PPP loan. And one of the things that our team discussed was, did the government do that intentionally, or kind of did that slip through the cracks? And so far, anything that we've read, we haven't seen anything that rectified that situation. So we know, you know, so that had that probably affected hundreds of thousands, if not millions of people in the country who, you know, file and pay themselves that way. So unfortunately, we don't know if there's going to be any guidelines that would assist those people. But
what about other cases going back to original loans? So what about the company that's got a let's say they got $100,000 monthly payroll, so 2.5 times as they were eligible for a $250,000 loan according to SBA rules, but they only borrowed, say, $100,000 because they felt that was all they needed to get them through, or maybe their bank put a $100,000 cap on how much they would lend to any one party for their risk profile, any number of reasons. Is there any way for, can people go back and borrow the remainder of in a scenario like that?
Yes, and you know, that exact situation was addressed. You know, actually, I know a friend came to me in that exact situation. He was eligible for a lot of money. He only took a smaller portion because he didn't think it would be forgiven, because this particular person was in the trade show business and there were no trade shows. So the guidance that we've seen so far is exactly what you said. Anybody that could have been eligible for more but took less can request a modification of their original loan for the increase, you know, for the difference that they could have gotten versus what they accepted. Also, anybody that returned either all or part of the original money for various reasons can also go back and reapply for what they would have gotten initially. You know, so that will help.
If someone go ahead.
One other thing is, anybody, for example, that let's say got a loan for $50,000, but there were subsequent, they got the money, and then let's say in April, then the SBA came out with additional rulings, which they refer to as FAQs, that would have increased that amount. They're able to modify, they're actually able to apply for the difference in what they should have gotten versus what they got, and get that as an adjustment to the first round money as well.
And if someone today wanted to go back and adjust the, I don't know if it's an addended application or what technically they go through, but to get the remaining available money, does that preclude them from participating in this most recent round 2 of PPP? Are they mutually exclusive, or could you do both?
You could do both. You can get a modification to the first and get a second, and you can also, if you never got a first, you can get a first, and possibly you can get, and I think you can get a second as well, as long as you get the first right away. I think They, I think they want maybe people to wait a certain period of time. We're waiting for the exact ruling, but in the spirit of everybody on an equal footing, they want people that didn't get a first to be able to get a first as well as a second, if they're entitled to that as well, based on the rules of the second.
Yeah, very good. So Neil, I know we're running a little bit long here. I want to just spend a couple minutes on this. We talked a little bit about this. And I think you said it. There's probably more we don't know yet than what we do. I mean, questions that just kind of jump to mind is, when is the SBA going to publish an application form that the banks can use? When is that going to be available? When will banks start funding? What's going to be the effective date? When will the clock start ticking on the 24 weeks? There's so many things we don't know. Can you kind of rattle off what you think the biggies are? And maybe more important is help everybody understand what the process is for how this unfolds. So this doesn't mean that you or I or Assure is uninformed. It doesn't mean that their bank is uninformed. We really are in a bit of a waiting game here, right?
Yes, we are. And as you were talking, I was just looking at my emails to see if I received any emails from the SBA or, to see if any new guidance is coming out. And
we expected something yesterday that didn't happen.
Right, we expected yesterday. In speaking to one of our lenders, Mike, you still there?
Yeah, I'm here.
Okay. In speaking to one of our lenders, they believe they will start accepting applications, or they are already accepting applications now, but it will be live, they believe, by towards the end of next week. So the rules should be coming out. People will be modifying their applications and software, yes, there's a lot we don't know. And, for example, we talked about documenting the reduction in revenue. Let's see, I'm just looking at the SBA site. 1 hour, new PP guidance issued. It looks like new guidance may have come out, actually. I'm not sure. I'm trying to.
So here's my commitment to the audience here, and anybody who couldn't join is Neil and I are gonna pick this back up. So knowing that as of the start of this meeting, there wasn't new published guidance. Neil, it looks like sounds like we're reading in real time new stuff that is being released. If history is any lesson, we know that there was a series of FAQs that the SBA had to publish, that this thing unfolded. While they started funding within just a couple weeks of the program, it seems reasonable that within a couple weeks that's probably going to happen again. It also seems perfectly reasonable that this is going to be unfolding over the next several weeks. So we're for sure going to have at least a part 2 to this series, possibly a part 3, 4. We'll see what updates there are to share. We want to keep everybody as up to date and informed as possible. I think maybe last word of caution that I would kind of want to put out there, and Neil, if you could comment, just I'd say beware of scams. So like, Neil talked about some banks accepting applications. We should be crystal clear. The SBA has not yet published an application, right? And so what happened the first time around, they published a draft of what they thought the application would look like. You all of a sudden had a whole world of nefarious participants creating their own online forums that mirrored those, saying that they were taking PPP applications, and they weren't even banks, they weren't even lenders. They were just trying to sell clicks to refer those things to banks, and then you'd end up having to fill out the real application later on anyway. So there's going to be, the SBA, I'm sure, is going to publish the real thing relatively soon, hopefully within a week. They might publish a draft first. I think it's reasonable for an aggressive bank to assume it's going to be not too dissimilar from the first time around. But just to be clear, that the SBA has not published this stuff yet. And the banks who want to participate are sitting on pins and needles, the same as you guys are sitting on pins and needles waiting for this detail. Any other guidance you'd want to give before we wrap, Neil, on that topic?
Well, you know, while the applications are, well, we're an agent for a number of PPP lenders, and our lenders, that while they're not processing the application, they are letting people pre-register. So, and initially it was just pre-registering. Now you can key in additional information, and they'll, you know, just so that you started the application process. You can't finalize it, but you can kind of get ahead of the line and get as much information in as you can. You know, and it's not fraud. You know, it's got to be somebody legitimate. And you know, I'm looking here, Mike, and you know, it looks like maybe something was put out very late last night, and it's kind of hard to tell. I don't see a slew of emails here. I'd have to go to the Treasury site, but you know, yes, there's, you know, we don't know exactly what additional. We believe that 95% of the information that and documentation that had to be uploaded will be the same. So we're just trying to figure out what additional information that's new this time will be necessary. But just two things. If before we close, there's just two things that I just wanted to mention that I think are important. When we were talking about people that got either turned down or some interesting stories, there's just two other stories I just want to share with people, where it was a case of lenders and banks not knowing the rules, turning people down when they were really eligible, or companies that really did not know that they were eligible because they thought they didn't meet the rules. So one, the rules were saying that companies with over 500 employees are not eligible, or over 300 employees are not eligible. However, again, the devil is in the details. The SBA calls this the alternative standard test. So if you have either in the first round over 500 employees, on the second over 300, if you meet the alternative size standard test, you could be eligible. And that test is two-pronged as follows. One, if your tangible net worth, which is your assets less your liabilities, is 15 million or less on March 27th, 2020, it made you eligible, along with if your average net income after taxes for the last 2 full years averaged 5 million or less, you were eligible. So a company with either 500 or 300 employees or more, right? So we actually helped a company. We had somebody that reached out to us first week in May, well, you know, 5 weeks after the program started, because we had put out literature saying that certain companies that had over 500 employees were eligible. We spoke to them and we explained this rule to them. We looked together with them at their financial statements, and they were not a profitable company. So their net worth was way less than 15 million. Again, they were not profitable, and they earned maybe 300,000 or 400,000 a year, not the 5 million. So they were eligible, and we got them $7 million. So this was a company that had no idea they were eligible. We showed them they were eligible. They got $7 million. Second was, we had someone that came to us, said they were turned down by their bank. Their controller read some literature that we put out about some of our stories. They asked for assistance, and they were turned down by a big regional bank here in the East Coast. And the scenario was as follows. They were a manufacturer, and they were purchased by new ownership, and the new ownership purchased the company, and the transaction closed March 9th of 2020. They went to apply to their bank. Their bank said, well, you're not in business as of February 15th, 2020, which is one of the magical dates, so you're not eligible. They came to us. We did some research. We have contacts at the SBA, so they assisted us. And lo and behold, the SBA had come out with a ruling, which is known as FAQ 38. And that was, they came out with that ruling. And FAQ 38 basically stated that if a business was purchased and has new ownership after February 15th, 2020, but it's basically the same company, same employees, the same wages, but a different EIN number, that company is eligible for a PPP loan. So we were able to help that company get $1.1 million after having been turned down. So again, there's a lot of exceptions to different things, and unless people are told exactly why were turned down, you know what? They should definitely, try to get a second opinion, just like you go to a doctor, where it tells you need surgery or you have a certain situation. It's best to get a second or a third opinion sometimes, because different people know different things relating to this program.
And Neil, you said that was FAQ number 38?
Yes, that was FAQ 38.
So guys, here's my recommendation, and I'd say Assure's recommendation as we advocate on behalf of small businesses to help you guys grow is the devil's always going to be in the details. The cool thing is the new PPP loans, but so there's some real serious opportunities for how to kind of retrofit and adjust PPP round one, that's retroactive stuff, whether it's the tax deductibility or loan modifications or change in qualifying expenses. And what I hear Neil say, that was FAQ number 38. Presumably there was an FAQ number 1 through 37 that preceded it. There's certainly more that came after it. This thing is going to unfold over time. So don't take no for an answer. Keep doing your homework. Offer Neil up as a resource if you'd like to use his resources. But fair to say, look for email, search social media. We're going to be and check out our website. We're going to be having at least a part 2 to this webinar series, presumably sometime mid next week, where we unpack the latest SBA guidance and bring some more clarity. We probably won't go over the high-level education of what's in the bill, what's not in the bill, what does it mean for you. We'll get real tactical on kind of unpacking the most recent FAQs so you can know exactly what to do and what to expect. So with that, just a reminder, Assure is in the business of helping small and mid-sized companies with payroll and HR. This is what we do for a living. It's all about helping companies grow by getting the most out of their people. I'd say a huge part of that role in 2020 and so far in 2021 it is really helping companies survive. We're in unprecedented times, and with that, Neil, I want to thank you for your time. Tremendous knowledge, doing over 800 of these things. I'm going to leave your contact information up on the screen for people to write down for a second here. We'll include it in follow-up email where we'll send out a recording to this event. And thank you for your time and expertise, Neil.
It's a pleasure. And I just looked, there were 53 FAQs, and the last one was published on December 9th, 2020.
Yeah, there you go. There you go. So yeah, this thing's going to unfold over time, and we're here to help unpack the details and help you guys get the money that you are legally that's legally available to you, and to maximize the opportunities so you can turn that into growth for your businesses. Neil, thank you so much, and thank you for everybody attending today. Look forward to talking to you all again.
My pleasure, Mike.